Rachel Reeves gave her spring statement and the markets reacted, and not in a good way. In fact, in a bloody awful way. The following Rachel Reeves' statement this morning, or lunchtime, bond yields climbed. 10-year gilts went up 0.176%, 25-year gilts went up 0.175%, 2-year gilts went up 14 base points to 3.78, the highest since December, and at the same time, Brent crude jumped 9%. It went above $85 a barrel. Higher oil prices will now feed into inflation in the UK, and that means higher prices for everything, because after all, everything has to be delivered. And so expect higher food prices. Go shopping. You can do it now. Higher gilt yields, of course, increase the government's debt and borrowing costs. And that is a problem, because I've got this billions of pounds of headroom, and almost immediately it's gone. Those gilt rises wiped that headroom out completely. They've gone. She's got no headroom. All for their head. Now, the market is now pricing in things, things it would normally take in its stride, but it's looking at these things with far sort of sharper eyes, like a basilisk, Only 1/4 interest rate cut by year end, they reckon, instead of the 3 that they thought they were expecting. Basically, one every quarter was likely to come. Now there might be 1/4% cut. The odds of a cut this month have gone from 90% to 30%. That is a significant recalibration, because that will affect everything for the rest of the year in terms of costs. And Reeves has previously cited falling rate expectations as proof that her fiscal strategy is working. Well, that now proves that her fiscal strategy isn't working. But today's move suggests investors are less convinced in her ability, and they are very, very worried about the future, and so they're cashing in. Now, those rising gilt yields, though, it means more expensive government borrowing, of course, tighter financial conditions, and pressure, of course, on mortgage rates. This is going to keep mortgage rates high, which means more money paying off mortgages, less money in people's pockets, which means the M3 money supply will also shrink, which means there's not enough lubrication, financially speaking, in the economy to even hint at a recovery. And so there will be less growth, or indeed probably no growth whatsoever. Now, the spring statement itself aimed to project steadiness, and instead it's just created chaos. And it's not surprising why. For a chancellor who always talks about, I have discipline and credibility, now we're finding she's got no credibility whatsoever. And as for discipline, well, she keeps making these rules and then breaking them. The markets don't like it. And so months of planning for this low drama fiscal update that they were having, as within minutes turned sour. Oil up, rates up, interest rate cuts gone and disappeared. And this is real numbers, not just the rhetoric of a political speech. This is people out there in the real world who are going to suffer because of that woman and her inability to do her job because she lied on her CV. We are truly up a shit creek, aren't we? Thanks very much. Bye.